In this video, we're going to talk about how we can use price action rules to help us navigate the market and identify high probability setups in the markets. So we have right now market that is creating structural lower highs. So as a trader, this means I'm mainly thinking about selling, and what is getting my attention is the fact that the market is working lower under certain geometric formation. And as a price action trader, which I'm working with pure price action candlesticks, my goal is to locate a channel, which is a key entry point, because this will help me to predict directional bias of the market, and this will help me to select places on a chart where I can expect smart traders to sell. Okay, every trending market has a push phase and correction phase, push phase and correction phase. So my goal as a price action trader is just wait, let the correction phase finish, sell when the correction phase is over, or go short when the push phase is about to begin. So right now we have push phase working lower. Okay, I'm going to zoom in. We have a new low, first entry short, second entry short, but I cannot really sell second entry short below bullish bar. I am a seller. I need bearish bar, and by the time I get double bar entry, I don't have no room to scalp down. So I'm going to skip the second entry short. The market keeps correcting. We actually have another second entry short, which is somewhat of a resistant bounce. Now I drew my trend line like this. I didn't take this trade personally, but there is overshoot. Okay, you have a uptrend working higher overshoot, which means you can expect stronger pullback in the opposite direction, especially if you're going to combine it with the main trend. For this reason, I'm going to mark it a little bit more aggressive, because it's always better when the overshoot plays out. But when the shortened trend plays out, but you have the overshoot, so this can give you the momentum combined with the main trend. Decent enough second entry short, and market continues to go lower like this. Significant push phase down. This gives you confidence. Okay, I am trading a bearish trend down. I'm going to redraw brand new uptrend. There is always a correction phase inside every single trending market. Okay, you cannot sell while the correction is taking time to develop. Breaking new high. Okay, you have push below EMA, and now what I'm thinking about is a lower high confirmation setup. Okay, you break, push to new high, trend line held, break below EMA is the sign that the sellers are back in the market and that the brand new push phase is about to start, and lower high is gonna give me an opportunity to capitalize, to catch the beginning of the new push phase. And here we have bar that looked super bullish, and towards the close reverse all the way back down. There's a massive tail, bearish tail. In fact, there's a slight tail at the bottom, but not significant. This is bearish reversal bar, great lower high confirmation setup. This is great first high probability setup for the day, because everything played out to the upside, trend line held, seller stepped in, you waited for a confirmation, and this is great lower high. I'm gonna fill second entry long. Well, I would have to sell below this bar, because this initial bar didn't get a trigger. New high, first entry long, second entry long, failure. But you can't really sell here, you cannot sell here, so you have to use this bar. Not ideal, because it's a little bit sideways, but you also see EMA rejecting, you see bearish tails, push phase is about to start. More aggressive trader can consider selling the felt second entry short, because buyers, they're gonna get trapped buying below EMA after the uptrend played out and a new push phase started. So you can see a repeat pattern what happened similar to here. You even had felt second entry long right here as well, but it was quite neutral bar. Okay, new low here, first entry short. I'm thinking about second entry short, can reset, new low again, can reset again, new low, first entry short, pull back, second entry short, and this time I have more room to scalp before this swing low. So this right here is a second entry short. You have to use double bar entry again, waiting for this bar, because you cannot sell below the initial bullish bar. If you're going to use double bar entry, dropping limit order, you can consider. I like this trade, decent second entry short, because trend is down, correction ended, attempt to test the new high, but EMA keeps holding every time, and market keeps working lower. Another push phase heading lower. Okay, I'm gonna redraw uptrend starting from the bottom. You can see I'm gonna connect the swings like this. Okay, I can't really sell now because I have potential uptrend in play. Okay, if I have some at least broad break push to new high, I can consider selling. If I'm gonna connect the very swings at the bottom, I have a nice trend line working higher, so I need some lower high below EMA. I was looking for a lower high breakout pullback, because this is too congested for me to sell, but uptrend created push to new high even for the wider channel. Okay, and because I can see that the correction is a little bit stronger, especially after this bounce, now I prefer felt second entry long. Okay, it still looks like a one leg up break second leg up. You have a lower high, but I believe it's a little bit too early because the pullback was quite strong. Now, why am I thinking about selling even though the short-term price action is trending higher? Well, because it's about the big picture. If I'm going to zoom out, I can see that the main bias is bearish, and according to trendline rule, I expect new low to be tested right here. So just because you have a break of the trend, it doesn't mean I'm going to reverse the market. I can only reverse if I'm going to get very deep retracement over this 60%, but this is not happening. I still expect, default expectation is to get new low. So I'm thinking about lower high or failed second entry long. Lower high is okay, and the pullback is smaller. Here the pullback was a little bit longer, so I don't think we can take lower high just yet. Not a bad trade. If you took it, I can see why. It's definitely not a bad trade. Just a little bit too early in my opinion, but you can take the lower high. Failed second entry long is better, safer, great hyper trade, great single bar. Bulls got trapped below EMA. We need to get new low and a great hyper setup, and new low was made. Perfect price action. So now we're gonna pause, looking to go short because downtrend played out. Downtrend played out, so I'm gonna pause, looking to go short. New low. Okay. I have a new low here, first entry short, pullback. If I'm gonna get a second entry short, I'm not interested because the downtrend just played out. Okay. You have a potential lower high, but it's a horrible bar, tail at the bottom, too stacked, too congested. Okay, when the main channel played out and you're looking for a new low of this smaller one, secondary one, you really want setup to form clean because the main channel played out. Okay, you can reverse. So this lower high is bad, tail at the bottom, too congested, too sideways. It's better just to be patient every single time the main channel plays out. Okay, the secondary channel can get new extreme sometimes, but it depends a lot on how strong the trend is. The stronger the main trend was, the higher the chance that this secondary channel is going to get new low. Okay, also if this push down to new low is super long and strong, there are a lot of bars, it can get new low tested, but here there's pretty much no trade. Let's just wait and we can have new market cycle. Okay, I'm going to draw wider channel like this. I do expect new high to be tested. Okay, I'm also going to draw trend range, even though this is not trend range just yet. New market cycle is about to be developed. New high, first entry long, second entry long, kind of messy area, tempting long. You know, you have a push to new high. It's tempting to go long here or here. It's not like super great trade because it's a little bit sideways, a little bit stacked. If you have some better bar, maybe some better, stronger bar. On my chart, it's a little bit too congested. You have uptrend break new high, uptrend played out. Let's see what's gonna happen. Okay, break new low. Downtrend played out. Now it's quite confusing. Are we going to go back into trend range? Are we not? We're going back above. If I'm going to draw wider channel like this, I was on my break here, but if I'm going to draw a channel like this, you have overshoot, so you can't really sell second entry short. Also, you have a channel in play like this. Okay. But you have overshoot, so can't really go short just yet. This is a little bit confusing now. When I'm watching this, I'm going to put my hands away from keyboard because it looks too sideways, but we traded up. So I can't really sell, but at the same time it's hard for me to go long because I don't want to be buying at the top into resistance like this. So I'm just going to remain patient. I can actually draw a trend line, something like this, connecting the swings. And you do expect new high to be tested. Problem is, the resistance here is so strong, it looks so wedged. Even though we have high-low confirmation set up here, it's simply too wedged. I don't think we can go long here. This entire area is quite messy. Uptrend break new high. Uptrend played out. Gonna redraw the downtrend working lower. We're still quite sideways. Not the easy structure to find a trade. But we're finally reversing down, so now it's getting easier to read. Why? Because my downtrend has more confirmations. Bounce here, bounce here, bounce here. Okay, we have a lot of confirmations. I'm looking for second entry short now. New low, first entry short, new low, first entry short, bunch of first entries. Okay, I'm gonna zoom back. You can see we traded down, consolidation, uptrend played out, brand new downtrend. There is no big trending market in either direction. This is why you're breaking new high, and we're gonna quickly adapt to a brand new trend. Okay, once you're in a big consolidation, something like this, where pretty much there is no main bias, you expect trends to pivot fairly quickly. So for this reason, I expect now new low to be tested following the trendline rule. However, we are above EMA, so I need to wait my turn. I want to see the key entry points. I'm looking for a lower high below EMA. Can I get a lower high below EMA? Breaking below EMA, good sign that the sellers are back in the market. Can I get a lower high? Back above, back below, and now I finally have the lower high. We need new low. Great hyper setup. lower high confirmation trade to test the new low of the downtrend. Quite hard to get filled here. Felt second entry long, but it's not full at the EMA, a little bit too far down. You needed to see it closer to the EMA. New low was made, so downtrend played out. So we're gonna pause, looking to go short. Downtrend played out. You actually have felt second entry short, almost good reversal pattern. The problem is the signal bar is not full above EMA and it's quite neutral. Almost decent reversal pattern. We needed to see a couple more ticks, bullish body closing above EMA. Not like this, but very close to be reversal pattern. Once again, your broad break push to new low. This broad break is negating any wider channel. If you draw a channel like this, you have no confirmations. So this is why you're confident to go long here, because downtrend played out with broad break push to new low, no confirmations. Okay, I'm gonna redraw bullish trend working higher, something like this. Clean trend working higher, overshoot is to a break. I expect new high to be tested, following the trend line rule. Simple price action. Second entry long far from the EMA. We actually have a new low, first entry short, second entry short failure. If you're wondering, is this double trap? It's not. Double trap needs to break the first entry and second entry. Double trap needs to be the lowest point. This right here is still first entry long, so this is a failed second entry short. It's a little bit too late, but educational wise, this is a great trade to consider. We need new high, great high probability setup, great signal bar. The correction is very broad to legs. Uptrend played out, breaking new high, perfect price action, and now the market is about to close. So this is the overall structure for today. It ended up being very great trading day. You had a lot of setups on the way down, no setups on the way up because everything is a little bit too choppy, but it's okay. Great lower high to finish the day with, and a great failed second entry short right here. So you can see trend line rule in full effect. This is why we look for these channels. This is what's going to help you navigate the market accurately, and you know exactly what to expect. You can actually maybe even consider this lower high, but it's a double bar entry and the first downtrend just played out. So it's better to wait for the confirmed downtrend with bounce here, and then you have a chance to short the lower high confirmation setup right here. But I hope you're good trading. I'm going to wrap it up. I'm going to talk to you next time. Good luck your trading.